Okay. Good morning, everyone, and welcome to another session of our Female Entrepreneurship Support Program, a collaborative initiative by TechQuest STEM Academy, and the initiative is part of the AfriLabs Capacity Building Programme. Itoro Emembolu, and I'm excited about today's session where our mentors will be speaking on raising capital and how to access funds and have a sustainable business. We have two of our mentors. They are wonderful mentors. Our first speaker and mentor is Fayo Williams, who is the founder and managing consultant at Simply Exponential Consult Limited. Fayo, you're very welcome.
Thank you so much, Dr. Itoro. It is a big honor to be here. Hello, beautiful people. Looking forward to a great session.
Thank you. And also with us here is Oluwatoyin Aralepo, who is the founder of Africa Finance and Strategy Hub. You are very welcome, Oluwatoyin.
Thank you so much, Dr. Itoro, for having me. And I'm so delighted and excited to be here this morning. Good morning, everyone. I believe we're going to have great time today. Thank you so much.
Okay. And as we do in all our sessions, please say hello in the chat box. Tell us where you're connecting from and introduce yourselves. And then also remember to put in your questions in the chat box. And while we go through the session, we will take those questions as we go along. And just before we invite our first speaker, Fayo, to have to tell us more about how to access funds, I will just quickly talk a little bit about her profile. So Fayo is a certified management consultant and learning and development. She's a licensed master trainer with the International Labour Office and Start and Improve Your Business. Fayo has a background in pharmacy with over 25 years experience as an entrepreneur and a safety professional. She's the founder, as I've mentioned earlier, and managing consultant at Simply Exponential Consult Limited, who are the owners of Exponential Hub. She was appointed into the ministerial focal group on the establishment of the Nigerian Youth Investment Fund. That was in 2020, and she has mentored a lot of people and business owners. She was also a coach in the African Union, African Governance Architecture, and two of the people she mentored were among the top 5 awardees. She mentored the all-female team that won the Angel Hack in 2018. And she's also a director at the Innovation Support Network with responsibilities for partnerships and collaborations. These are just some of her achievements, and I'm sure as we listen, we'll learn more from her. So once again, Fayo, you are welcome, and over to you.
Thank you very much, Dr. Itoro. Once again, it's great to be here. Thanks for that awesome introduction. I just want everybody to know that I have glasses too. You know, I'm just not wearing it. So I can't be the only one not wearing glasses in this trio. So we will go straight on to the presentation. I guess I have about 20 minutes, so I'll be watching the time from my end. The title is Raising Capital and Access to Funds and also Business Sustainability. Dr. Itoro has very kindly introduced me. These are just some of the organizations I belong to. So I think I belong to everybody. And I'll be telling you a little bit about my journey with regards to raising capital. So my slide here is about a 1-minute poll. I want this to be very informal. So just put in the chat box the answer to this question. Have you raised capital from any of the following sources for your business? Just indicate a yes or no. Have you had a grant, a bank loan? Have you been funded by angel investors? Have you accessed private equity or venture capital? Please make sure you type in the chat box an answer to this, whether yes or no. As we go along, I'll pick up some of your answers. Now, in terms of introduction, we say money is not always the problem. Money is not always the problem because, for instance, if you have a good product, a product that people want, a product that is scalable, that is desired, that is exportable, that is relatable, you know, people will come after you. If you build a better mousetrap, people will build a pathway to your door. But if your product is just a nice to have, it's not solving any problem, then you find out that you might always be short of money. Now, capital is not all about money. Today, you are having in this room combined experience of over probably 200 years from the mentors who are here seated, from South Sudan, from Nigeria. The collaboration has brought you capital that can make you grow your business, that can make you be a better entrepreneur. This is capital. You understand? It's not always about money. And there are also non-financial institutions who offer you capital in one way or the other. There's equipment leasing. Many a times, entrepreneurs just think of money, 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 but it's not always the answer. So let's go to the next slide. Now, let's talk about capital, the mullah, the dollars. You know, it's the live wire of a business. I agree. And it's all about the cash flow in and out. Now, money is one of the 4 factors of production. You have land. You can see the location marks there. You have, you know, the team, the people to run your operations. You have money. You have the entrepreneur. The entrepreneur is very central. And the entrepreneur is the one who can attract these funds by leadership, by example, by having strategies, the right strategies in the business. If not, money will not come. Why are we talking about this? We are talking about accessing capital, particularly to female entrepreneurs, because there's been a lot of exclusion. I am a living witness of this. I've had a bank manager tell me to my face, "Madam, so that's all you need. Why don't you ask your husband for the money?" And I just took a look at him and shook my head. You know, if I am the one running the business, it's the business that needs the money. And why should I not have a right to approach a bank? So I tell you, there's a whole lot of exclusion. People like Bumi Lawson, the MD of Edfin Microfinance Bank, she's also mentioned the gender gap. Right now, all over the world, people are talking about gender-lens investing, because when you invest in a woman, you are investing in the society, you are investing in the family, and you are growing the economy. There's partnership. There should be partnerships for development. This is part of the SDGs. There are expanding opportunities. Right now, a whole lot is going on. Even the big guns, the big 4 consulting firms, they're doing things for women. The large IT firms like the Googles, the Facebooks, they're doing a whole lot for women. Under the Transform Africa, we have our own Dr. Ngozi Okonjo-Iweala as DGWTO, and she has said she is going to find a way of including SMEs, women, and youth. We have the AFCTA, you know, that's going on now, and we are going to begin to have better intra-African trade to transform Africa. Instead of only 16% of trade being amongst African countries, we want to increase that to a 3 trillion in a couple of years' time. So what stage of business are you? Just before I go on to that, I see Amaka saying that she's never gotten access to finance. Mariam, no. Chinwe, no. Ogubwike, no. Olumide, no. Efogene, Aluko, no. You can see that access to finance has been an albatross, and there are reasons. So if you're an SME or startup, you need to know your rank, if I can put it that way. Because for money, there's a fit. There's money that is good for a business that is just taking off. There's money that is good for a business that is expanding, like private equity. There's funding that is available for a business that is scalable, rapidly scalable, that is increasing in revenue at 5% per month or 10% per month, like a logistics business, an Airbnb, they are on the platform, an Uber business, they are on a tech platform and they are scaling rapidly, they are likely to attract the venture capitalists better. So what are the features of some of these sources of funds? Let's start from free money. You call it free money, I call it a grant, and it has certain features. Number one, it's for a fixed purpose. Grants are not just given to you unless, well, social investment program, even from the federal government, they tell you to use it to increase your business. There's a fixed deadline, fixed funding amount. They can tell you, oh, it's $5,000, it's $10,000. So you cannot go there and apply for $50,000. It's fixed. It's issued at specific times. They'll tell you, oh, the funding window is open in September, and there must be eligibility criteria. They want to know if you're a not-for-profit. They want to know if you're registered, age range. There are a lot of eligibility criteria. And then there are the government-sponsored development funds that come at an interest rate lower than bank loan. And I tell you, ladies, particularly on this platform, ask for these funds. Tell your bank that you understand Central Bank of Nigeria has issued a 5% or a 10% kind of funding. That is the one you want. Because if not, the banks are ready to sell you their own products. Meanwhile, you have Nigerian Youth Investment Fund, you have the NIRSL Microfinance Fund, Development Bank, and so on and so forth. Even individuals like Dangote, they make funding available to places like Bank of Industry, and you need to see whether you can get this fund. So Efogene Aluko has got an angel investor. That is good. Angel investment funding, that's very good. But if you go to a bank, for instance, you need to ask a lot of questions. Number one, the type of bank. Make sure you select an SME-friendly bank. Not all banks are SME-friendly. Some prefer to deal with the big institutions. And then ask for gender-based products. There's the W loan. There's the Women Connect this or that. Ask for a gender-based product if you are a woman. Make sure, like I said again, it must be a good fit. If you are developing infrastructure, you don't need a 6-month or 1 year short-term loan. You need something that has a tenure of like 5 years so that you can pay back conveniently. If you are running consulting business, it may not be easy for you to pay back monthly. You may need to pay back quarterly. Make sure you have a good fit. Negotiate everything. Clarify the small print. Is there a management fee? Is it one-off or is it every year? I need to know. Make sure you have good documentation. Without good documentation, you are not likely to access a bank loan. And we go on to look at even CBN products. They usually require a business plan. If you are talking about anchor borrowers scheme or something, you may be asked about this. You have a record in what they call the credit registry now. And the goldfish has no hiding place. We used to say Uncle Sam will get you. Now, even Mr. Nigeria will get you. Because every bounce check, every loan that you didn't repay, it's recorded in a credit registry. And the financial institutions ask you to sign off for them to access it. You need to update your business records. You need to separate your company account from your personal account. Hello. You know, you cannot dip into your company account to buy chicken or to buy Jimmy Choo handbags. It is a company account. All your income must be banked, and then you raise a check to make your expenditure. And it's useful for you to also belong to professional groups, Lagos Chamber of Commerce, Innovation Support Network hubs, the NASMEs. These are people who advocate to government, write letters on your behalf, give you access to opportunities. Okay, it's very important to be a part of that. Now, we've spoken about record keeping and how important it is, particularly for business sustainability, for you to know whether you are making profit, for you to know whether you are growing. What are the metrics you set? Do you set a kind of target in terms of growth in revenue, number of customers, and fewer customer complaints? How do you track your performance? These are very important in business sustainability. And for those of you that are startups, I know I have just a few minutes left, so we'll just be looking at what you need to have. You must have a realistic business, a business that truly solves a problem. You must create an MVP. I was listening to Mama Money this morning about how she even just funded 4 women to just start off, and then she was able to access to me a Lumelu grant. Some of you have no MVP, and yet you want to attract the attention of a venture capitalist. It's not going to work that way. Good management. Do you have a team? Founder, co-founder? Do you have partnership agreements? Is there an opportunity for good financial returns? The kind of returns that venture capitalists are looking for are huge, because not all their ventures are successful. And you must have a USP, a unique selling proposition. And finally, I'll tell you a little bit of my story in terms of accessing funds. So I got a big contract, thank God, to supply in my first business. I am a pharmacist and I make first aid boxes. So I think I got a contract to supply 131 bank branches. And I said, wow, this is a big job. In fact, I was being discouraged. That job is too big for you. You better leave. I said, no, I'm going to do this job. So I looked at my savings. My savings were in treasury bills. The bank frowned and said, this kind of collateral is not under our control. Well, we would need more. So I had to run to my mother, got her to come into Lagos to sign off her shares, to use as collateral for me to access money. And then I just thought of all the trauma, taking her from the bank to the registrar and all that. And I said, if I made money, I'm going to keep this money to have my own shares and my own collateral in the name of the business. And that's exactly what I did. But we all know what happened in 2008, 2009, when the stock market bottomed out very nicely. We used to hear Bank of America, Lehman's brother, and we said it is far. But just as COVID-19 has shown us, we are more connected than you can ever imagine. And very soon it hit the shores of Nigeria. And my wonderful nest egg shrank to 20%. As the price of these shares were going down, my blood pressure was going up. And I was gaining weight. I was depressed. And I thought to myself, you're a pharmacist. This is not good enough for you. What are you going to do? I hate drugs. So I decided to exercise. In exercising one day, I was in a hurry to get out of the house. I broke my tibia and I had my leg in a cast. You can see me having some training with my leg in POP there. It was not just this little spray bandage, real POP. And I was sad. But the good news is that my blood pressure was 139/90 before, while the stock market crashed. But after the exercise and I broke my leg, it had shrunk to 110/70. So that was the good news. And I now thought to myself, I have time in my hands. I'm out of circulation for 12 weeks. What am I going to do? I now leveraged on technology. I went to my webmaster. I called him. I said, you've been talking about this SEO so that if I can't go out to find customers, let customers find me. And I downloaded a plugin, all-in-one SEO, stuffed all my keywords, and voila! Within 1 month, I was found by a major tier 1 bank and given a 7-figure contract while I was on the sickbed. So I tell you, you need to persevere. There's always a silver lining. Even all these COVID times, you can recover all, just as I did. And I want you to stay focused, stay upbeat. Know that access to capital is a journey. You need to be financially literate. You need to keep your documentation. You need to get it all together. Keep on trying. And then use your experiences. Like you can see in these CDs, I partnered with somebody, got an audio CD made, was able to share with others, and I haven't looked back. Technology is an enabler, and I know that you will use it too. And as I round up today, I would like to say that if you have any questions on writing your business plan or packaging your funding applications, you can always reach out to me on social media at Simply Exponential Consult, Facebook, Instagram, and Twitter at Fayo Williams. On Facebook, Twitter, Instagram, LinkedIn, or SlideShare, have a couple of presentations. It's been great being with you. Thank you, and God bless you.
Thank you very much. Thank you very much, Fayo. That has been very, very interesting. And I'm sure that the questions will soon be coming in. And while we're waiting for you, and please, if you have questions for Fayo, please put them in the comment box, but we'll take that after we hear from Tony, and then we'll have all the questions there. So before Tony comes up, I would like to also run through her profile, because she also is a very, very experienced mentor. And so I'll just run through her profile. So Tony is, like I had mentioned, she's the founder of African Finance and Strategy Hub, and she's a strategic finance expert and has a first class in accounting. She's a fellow of the Institute of Chartered Accountants of Nigeria, a fellow of the Institute of Information Management of Africa, and an alumni of the London School of Business and Finance. She has over 15 years experience across banking, telecoms, and fintech, and her expertise includes finance strategy, business partnering, financial planning, analysis, reporting, audits, and business procurement. She was the head of the budget in UBA and was responsible for over 400 business offices for their budget preparation and consolidation. She was the commercial controller and financial controller at Airtel Nigeria, where she managed a portfolio of over $1 billion. And more recently, she was the CFO of Cellulant Nigeria, and currently as the founder of African Finance and Strategy Hub, who helps to support businesses to access professional financial management, their skills and tools. And she has a mission to help the businesses become sustainable financial structures and get them ready for fundraising. So once again, Tony, you're very, very welcome.
Thank you so much, Dr. Itoro, for the warm welcome and for the introduction. Good morning, everyone. I'm so delighted to be here, and I'll be sharing with you. We've had a very insightful introduction by Mrs. Fayo Williams, and I'll be building on that to just highlight additional areas that you can look at to sustain your business. So I welcome you once again. My profile has been read. So I'll just, because some of the introduction has been done on why we need funding, I'll touch a bit on the business model validation, some of the sources of finance, the phases of financing, some of the things you need to consider when you are bringing investors into your business, and some of the requirements for funding in terms of your documentation, and also highlight some of the opportunities that we have. The presentation is detailed, so I'll give a summary of that. And since the presentation will be made available, you can have access to going through in more details and assessing some of the opportunities that have been highlighted in my presentation. So just to give some insights again, building on what Mrs. Fayo Williams mentioned, when it comes to funding, it's not just about money. You also need to look at the social capital, like she mentioned, networking and access to platforms like the one you have now is also very important. So it's not just about the financial aspect. You also need to devote some time in building your business. You also need to look at getting information, getting knowledge, because even if you get all the money in the world, right, as much as a bullion van, if you don't have the financial knowledge, if you don't have the intelligence, then you will not be able to manage your resources appropriately. So it is important to identify what is lacking. Is it network of opportunities in terms of getting clarity? Is it time? Because you need to devote some time, right? Because if you don't do this, it will be very difficult for you to manage your resources. So just laying that foundation. And I also want to just spend some few minutes here in understanding your business model. She mentioned about having your MVP, that's the minimum viable product. And I just want to touch briefly on how this connects to your business model. No matter the type of business you are into, you need to understand what problem are you solving. Because if you are not solving a problem that people can pay for, then even if you source funds, it will be difficult for you to manage. And getting funds, especially when it comes to the venture capitalists or private equities or angel investors, if they are not convinced about the problem you are solving, then it will be difficult for you to get funding. So you need to understand what is the value proposition, what is the problem you are going to solve, who are you helping, who are the customers that you need to interact with, how are you going to reach them, how are they going to interact with you. These are some of the things that you need to consider before even going for funding, because these are some of the questions that they will ask you. You need to understand the key resources that you will require. What are the activities that you will be involved in, depending on the type of business? Who will help you out? Who are your partners? Maybe you need vendors. If you are producing or manufacturing, you will need your staff, right? As part of your key resources, you will need vendors that will be supplying you the raw materials. You will need your bank where you can save your funds, where customers can pay, right? You will need other partners, maybe your accountants, your lawyers to help you draft your agreements and things like that. So in coming up with all these things, you need to also consider how much will it cost? Because at the end of the day, every activity or all the activities you are going to be involved in your business will cost you money, and you have to also make money. How are you going to make money? How are you going to monetize? How many revenue streams are you going to have? So these are some of the things that you need to, is like your foundation. Because if you are not very clear about this, then you won't be able to quantify appropriately how much you will require for your business and how you are going to get the funds, what stage, how long do you need to, put up those activities, right, for you to be able to get the funding. So that's the foundation. Then just building on that, what problems are you solving? I've mentioned that. Which products are you going to present to the market? For instance, because of COVID, people now started producing face masks. They identified a problem, because the government said, let there be social distancing and there should be some preventive gears, right, to protect people. So people identified the problem, and so many people started making face masks. And that is like a value proposition. And they already know the customers. In fact, almost everybody requires this. It's not even limited to a particular segment. And they started thinking, how will they get it? Are they going to start manufacturing in Nigeria, or they have to import from China or from elsewhere, right? What are the suppliers? How are they going to supply? How are they going to distribute them? Will they be in supermarkets? Will they be in hospitals, pharmacies, and different areas? How much is it going to cost? How much revenue is going to be generated? Because at the end of the day, when you match the cost and the revenue, then you must have your profit. Otherwise, people won't invest in your business. So the next thing I'll look at is, just looking at telecoms. This is one example that we can all relate with, all right? Because we are even using data to assess this platform. So what's the value proposition of an Airtel or an MTN or a Glo or a 9 Mobile? They want to provide the best network quality for voice and data. At some point last year, people could not move about. So many trainings were held online, like the one we're having now. So people require data for connectivity, despite the fact that we are using Webinar Jam as the platform. But for connectivity, for us to connect, we needed data. So as we are on this call, you are using data, either Airtel is generating the revenue, or MTN is generating the revenue, or Nine Mobile is generating the revenue. So just to give you a perspective that if you are solving a problem, your problem must generate revenue, and you must identify the customers you are going to serve. Is it like the telecoms industry, prepaid customers, where you do pay as you go, your postpaid, they pay at the end of the month? You know, when you segment, you'll be able to know how to reach out to them. You classify them into very VIPs and, you know, customers that you need to just provide a way of connection with them, right? Then the resources, the sales sites, the 4G network, the 5G network, the staff as well. Then there are key partners. Talk about the banks, the equipment providers like Ericsson, like Huawei, and the logistic companies, right? Then when you look at all these activities, there's a cost. They have to pay salaries, they have to maintain the network, they have to get SIM, right? And at the end of the day, they are making voice revenue with calls. They are making data revenue like what we are doing right now. They are selling devices, they are selling broadband. So at the end of the day, you know, the cost must be lower than the revenue for you to have a sustainable business that can move on. So I thought to set this foundation again, and for you to build this model by yourself and to see how you are going to generate revenue, who are the customers that you are connecting with, what are the resources you need, who are the partners you need, what is your cost structure, and what is the revenue model. And at the end of the day, you can identify what your profit will be. So just looking at the funding sources, there are internal sources and there are external sources. Now, internal sources, if you are just starting your business, maybe you have your personal savings or your retirement funds, or you are getting money from your family and friends. And sometimes, if you're already in business, maybe you, based on your relationship with your vendors, you can access some credit facility, you know, without paying interest. And this is where your social capital comes in, because if you don't have a good relationship with your partners, they don't trust you, then they won't be able to avail you that support. Remember, we said it's not just about money. Your relationship also matters when it comes to funding. And when we look at the external sources, we have equity, we have loans. Loans can either be short-term or long-term, depending on what you need it for. And I'll get to that in a short while. Then you have crowdfunding. This is also getting popular here, especially in Nigeria and other areas in Africa, essentially, where people come together to fund a particular project. And this is common, especially with the agri-tech activities or businesses, you know, where they ask you maybe contribute a certain amount, or maybe 50,000 or $200 for a specific period, maybe to breed chicken or to grow some crops, maybe cashew or rice for a particular season. And after the season, you know, they harvest, they sell, and they pay you back. So that's about crowdfunding. Then the venture capital and the private capital, where you have investors, right, that are coming to invest as a startup, or maybe you're already in business, and if you're having issues, you now have private equity investors that will come to resuscitate the company. And like Mrs. Fayo mentioned, you know, she dwelled so much on the grants. She explained the grants is for a specific purpose, a specific amount, and you need to really understand why you are getting it. And sometimes you have subsidies from government. So sometimes, you know, the donation, the subsidies, the grants, they don't have any specific requirement for return in terms of maybe paying interest or even paying back the capital. So sometimes they are referred to as soft funding. So one other important thing you need to consider as a business person is understand the stage where your business is. right? Because when you understand the stage, then you will know what is applicable to you or what you can have access to. For instance, if you're just starting your business now, you have an idea. A bank is not the best place to go to because banks don't usually invest in startups. You've not tested your idea, they are not sure whether it will work or not. And because of the fact that they get money from the surplus side and they lend out to the deficit side, right? They can't take up seed funding for most startups, given the nature of their risk and the profile of their deposits and their risk assets. So if you are just starting your business, it's either you use your personal savings or you reach out to your family and friends. And sometimes you have angel investors, right, that are ready to invest in your business if they believe in what you are trying to do. And usually these are small amounts. Then sometimes you have grants, as we were told earlier. Then as you begin, once you start and you are seeing some traction, you are now, customers are already asking for your product, you are beginning to grow a bit. Then sometimes you can start bringing maybe equity partners. And I want to use one example in Nigeria, that is Paystack that just sold to Stripe, right? They started as a seed capital with an accelerator or incubator program. I'll come to that shortly. And it's not that they started yesterday and everything they just blew overnight. It took them some steps, right? So you need to start as a seed, test your ideas, and as you are gaining traction, then you begin to bring in other investors, you begin to apply, you begin to look out for people that are ready to invest in your business. And as the business is growing, then you have access to microfinance. Maybe you can start approaching the development agencies and banks, maybe for short-term needs, right? For your working capital. And as the business is growing, then you can start looking at maybe having permanent credit lines in banks. Then maybe you want to go to the to go public, or you want to raise equity capital, trade financing, because at that point you are established. There's a regular cash flow that is coming into your business. But as you are starting, the cash flow, you can't really determine it. That's the reason why if you are just starting out, getting a bank loan may not be appropriate, because you are under pressure to start paying. You are under so much pressure to start paying, which you may not be ready for. And sometimes the business may not even work out the way you have expected. And you may need to tweak your business model or, pivot into something different. So these are some of the things that, you need to establish. So what I need you to do is looking at this matrix. Which level are you now? Where are you now? If you can just put that in the chat box, which level are you now? So just type that as we are going on. Now, the forms of equity financing for small businesses, angel investment. Thank God, I think someone has enjoyed this before. For you to just have an understanding, an angel investor is a wealthy individual or someone that has surplus funds that provides capital for startups, usually in the early stage. So it's not something that, and the value is usually very small, maybe $5,000 or less than that, because they are also not sure how it is going to work out. So it's like a trial investment, so to speak. And as the business is growing, then you begin to look at, okay, what are the other areas that you need to work on? Then when it comes to venture capital, so these are established institutions that invest in startups, right, and small businesses. And it is usually from the seed and the startup stage, right? And they have, and I will show you the difference between a venture capital firm and a private equity, because sometimes there's a mix-up between venture capital and private equity. And, you know, when it comes to private equity, this is also becoming very, very popular. And there are some examples that we even have in Nigeria. There are some companies that were funded by venture capitalists. An example is Paystack, right? And the example is Paystack. They've been able to sell now. So one thing about venture capital firms is that, you know, as the business is growing, they bring in more investment. Or other venture capitalists now buy it over, right? Depending on the size of the business. Then we have examples like Easy Shop, Easy Cook, right? She was also funded by venture capital firms. And there are so many other examples that I've indicated here that you can make reference to later. So like I mentioned earlier, when you look at your business, where are you? The seed, this is like the starting point, the early stage. So as you are starting and as you are growing, the early stage, you have access to venture capital firms that are ready to invest. So as the business is growing and getting established, that is when you have private equity firms, because they don't invest in startups. They invest in companies that are already established, that are already existing, so that when you want to start making application, depending on the stage of your business, you either look for angel investors, or maybe you reach out to your networks, right? And I think in Nigeria, we have the Lagos Investor Club, right, in Nigeria. So you need to look at the stage will depend on the type of funding that you require. So this table is just telling us the difference between a venture capital and a private equity, right? In terms of the type of companies they invest in. VCs usually look at very young companies. If you have a very good idea, you know, and especially fast growing tech startups, that is their major area of interest. Then when it comes to capital, is usually not a very big amount. Is most of the time is less than $10 million, right, that they will invest. And as the business is growing, then you now move on to the private equity. Then in terms of involvement, depending on the type of fund, they can help you with your marketing. They provide some expertise, right, that you can leverage upon. Then their investment form or the format is usually equity, in which they take up some stake in your business. Then when it comes to the fees, right, they have the management fees, they have the performance fees. Now, the private equity, like I mentioned, they invest in companies that are already established, right, or maybe they are having issues. Those are the type of companies that they usually invest in. So this is just talking about the phases. You need to have your business plan. You need to know, understand your business model, because they are going to scrutinize your business model, and you will have calls with them. You prepare your business plan. They want to be sure that they are going to get some investment out of whatever, or returns out of their investment. Just to quickly mention that you also have accelerators and incubators. You know, these are companies that provide guidance and mentorship. And there are examples that I will give in the subsequent slides. So incubators, usually they nurture the startup. Is like helping you to grow, understanding they help you to build your products, and, you know, they provide some guidance, right, to you. However, accelerators, they just help you, you know, they provide, sometimes they also provide seed investment, like the Tony Elumelu Foundation and MasterCard Foundation. They support you in mentorship and to grow your business as well, right? Then these are just some examples that you can make reference to when you are going through the presentation. The MasterCard Foundation, you have Leap Africa, the Faith Foundation, the Google Launchpad, and the Y Combinator. In fact, Paystack started with Y Combinator. So these are things that are real that you can also leverage upon. So now when it comes to equity, because you are giving out part of the stake in your business, you need to really evaluate it. Are you ready for that? Because most businesses are not ready to share control. So if you are not ready to share your control, then equity is not for you. So these are some of the points that you need to consider, right? And I've also highlighted what some of the things that put investors off that you need to avoid. So you can go through this later, to have all the details and check your business against that. So these are also some of the forms of loans from financial institutions. So one point I just want to mention is don't use short-term loan to finance long-term assets. Otherwise, you'll be under pressure when it comes to your funding. So these are some of the documentary requirements that you can look at later, the qualification criteria, some of the things that you need to consider, some of the things that the banks also consider, when you are starting your business or when you are requesting for loan. And there are some tips that you need to also take cognizance of so that you don't miss out on the investments and on the loan opportunities. These are some of the agencies that you can also reach out to for facilities. And I've also highlighted some of the available funds from CBN and Bank of Industry that you can have access to, right? And Mrs. Williams mentioned about the Nigeria Youth Investment Fund. So the eligibility and the BOI loans are also indicated for you to assess, and also the Lagos State Trust Fund. And I've highlighted some of the tips that you can refer to when getting loans, right, and grants. So these are some of the key takeaways. Separate your business, make sure that you have all your documentation, seek financial knowledge, and be clear about what you want. So I would like to stop here because of time. And one thing I would like to say is that opportunity dances with those already on the dance floor. So my question to you is, are you ready? Are you on the dance floor? Right? So nothing is more expensive than a missed opportunity. So this is a lifetime opportunity that you can't afford to miss. Well, this is just talking about some of my other coaching services, and you can reach out to me on Instagram at Toyin Aralepo, and this is my business handle, Africa Finance Strategy Hub, and I'm available by email too. So thank you so much for the opportunity, and I hope you are going to execute. You have to execute. Thank you so much.
Thank you very much, Tony. Thank you very much. That was quite a lot of information, and I'm sure that entrepreneurs will be looking forward to the slides. So there's a question about the slides. The slides will be made available. Both slides will be made available to everyone. If you've registered, it will be made available. If you haven't registered for the session and you still like the slides, please send us an email to community@tqstem.org, and we'll make the slides available to you. And then the videos will also be made available on our YouTube channel. So please just put in your questions now, and we are going into the question session. So if you have questions specific to your businesses, please put them in and we will address them. So we'll start with Fayo. So Fayo, you mentioned about to banks, or they ask about specific investment. Where would you suggest would be the best place to get information about funds or capital that they could access or are available to them?
I think the membership organizations. The membership-based organizations, like if you, first of all, can I just say awesome presentation, Toyin? Here I am clapping for you. That was awesome. And we're building on that. Yes, the membership associations, honestly, they make you aware. As those opportunities drop, they disseminate the information. I remember during the lockdown, we had this COVID-19 funds, and it was on all my membership associations like NECA's Network of Entrepreneurial Women New, like ISN, like the Lagos Chamber of Commerce, like NASME, like ASBON. You know, you need to belong to one of those associations. Not only will they let you have the opportunity, they will collate your names and possibly submit to let you know, let the government know that these are the members who have applied for this particular fund. And right there from the comfort of my house, it wasn't comfortable. There were some sleepless nights, but I was able to access the COVID-19 funding. I got 16% of what I asked for because I had all my management accounts, all the audited accounts, I had them scanned on the laptop. So I was able to, you know, fulfill the requirements. And this is what we're talking about. Be a member of an association, have your ears to the ground, and be ready to dance with opportunity when it comes.
Yes, I think one of the last thing you mentioned is very, very important, being ready. Ready. So having all your documentations ready so that once an opportunity comes up, you are able to take advantage of the opportunity. That's very interesting. And thank you very much, Fayo. So you mentioned about the different stages when you were talking about the funding matrix, and you asked the question about which levels most of our entrepreneurs are on. And so from what we have a lot of our entrepreneurs either at the seed level or the startup level. What will you have to say to our entrepreneurs on both levels? Because I think that most of them are within those two levels.
Okay, so what I'll say is you need to, or they need to start small and scale fast, because at that stage is a very critical and risky stage. And that is why, you know, the banks are not really interested, you know, because of the risk factors or the level of failure at that level. So what I will advise is a situation where, you know, they join memberships like Mrs. Williams mentioned, and they can also join the Accelerator and Incubator programs, right? That we teach them so that they can grow, they can understand and gain financial knowledge. And also, this is where, you know, building that trust with your network is important. For instance, when you have your suppliers, right, and you have very good relationship with them, they can give you credit. And sometimes you can leverage on relationship with your customers as well, you know, for them to pay in advance, depending on the type of products that you are into, right? So as you begin to grow, and don't hesitate to take up opportunities. There are grants that are available, right, that you can leverage on as startups, you know, to prove your concept, right? And you can also join, like Mrs. Williams mentioned, associations that can push you forward, right, in terms of understanding. So at that stage, you need to understand and be grounded so that, you know, you understand what is required, you understand how the cash is moving, you understand when you need your cash. You need to gain that financial intelligence at that level. And as you have the financial knowledge, then you'll be able to manage your business better.
Okay, thank you. Thank you very much. So there's a follow-on question to that, Toyin. So how can a person gain the necessary financial literacy to be competent enough to access these opportunities? Alexandra is asking that.
Okay, well, there are so many ways you can get that. You can attend financial literacy courses, you know, that will give you that insight, especially when it comes to your bookkeeping. So when I talk about financial intelligence or literacy, there are specific areas that you need to look at. You need to look at your bookkeeping, your record keeping, because that's the starting point. If you are not keeping records, if you don't know what records to keep, then it becomes difficult for you. Then you need to understand a bit of accounting and your pricing, because if you can't price properly, there is no way you can know whether you are covering all your costs. You will understand what it entails, right? To cover, to price properly, what are the costs that you need to consider? What are the things that you need to do? If you want to do some discounts or promotions, how do you price? Because some just make the mistake of just dropping prices, just following others without understanding the impact. Then you must be able to understand and interpret your financial performance, right? In terms of your cash flow, what is coming in, what is going out, when is it coming, when is it leaving? Because if you understand all that, you can balance it. So what I will advise is get a finance coach, right? You can have a one-on-one coaching session where you understand. And these are some of the services that I provide. And I have some courses, right, that you can access to understand areas you are losing money, approaching it from that aspect. Then how to do your pricing, what are the things that you need to consider. And I've also dropped my handle, so I share tips almost on a daily basis to help businesses. So even if you don't apply for the course or register for the course, you can keep getting some tips. And if you have questions, you can reach out to me.
Okay.
Can I jump in? Itoro, Can I jump in a little?
Yes.
I would also agree with all what Toyin had said, and that's really an awesome resource that she is, and all the tips she's offering. I would like to add that our entrepreneurs can read books. I would particularly recommend The Richest Man in Babylon by George Clason. That book, I picked it up, I could not put it down. And it's an old book, but you could be able to get an ebook maybe off the net, an ebook copy of it, and it is really awesome. Another one is Robert Kiyosaki's Rich Dad, Poor Dad. In fact, that is a trilogy. He has the investment guide, he has the cash flow quadrant, and we even made our children read that book. So it's also important, as we entrepreneurs are getting this financial literacy, let's also make sure we pass it down, to our children and the rest of the family, because, this thing is like it's co-owned. One person cannot be literate and another person wasting funds. So you must make sure you carry others around you along. Even my staff, I got someone who's in stockbroking to come and teach them the basics of saving and buying shares and buying stock, because nobody wants to be a slave forever. And that is the kind of attitude we should have for financial freedom, to seek it diligently. Thank you.
Thank you. Thank you very much. I know we're running out of time, but we'll just take one or two questions and then we'll round up. And so, Fayo, this is a question Ifan is asking: what's the one most important thing the business owners or entrepreneurs need to focus on to get the business funding to grow their business? What would you say is the most important thing?
It's back to documentation, and together with documentation, I would look at the markets, because the investors, they want to see a clear path back to the money. Toyi said very rightly that banks, because of their risk outlook, is other people's money. It's not their money to give away. So you must demonstrate that there is a market for your product. You can do this by having off-takers, by having indent orders that you can show that I have this contract to serve my customers for the next 12 months. If I am able to access this funding, it is from these sources I'll be able to repay. So bankers want to be sure that you will be able to repay, and you can do that by keeping record of your traction so far, your LPOs, your contracts, and then the future contracts that you have. That is very, very important, along with doing your maybe P&L monthly and being able to show your records, and also have a history in your bank statement, by the time they look at it, they would know whether you are truly paying in the proceeds of the business. If you have a 3-month spell and nothing came in, they'll be very worried about you. So those two things, the record keeping and the marketing, get the market access clear and provable that you can sell your goods and services.
Okay. So we'll have that last, and I would like I would like a response from both of you, and as we round up, maybe a last point you'd like to leave the entrepreneurs with. Oluwadamilola is asking, at what point in one business should one get one for business? And what is to be done if the person is afraid of making profit that leads to fear of applying for funds or fear of loans? What advice do you have for Oluwadamilola? And last advice for our entrepreneurs.
So can I go first?
Yes, please.
Please, you don't borrow money by force. So it is not by force. There are companies that have grown organically. A company like Duduosu, till they started buying trucks and everything, they had not borrowed a kobo because they had a good product and it was selling. So I would like to say that even before you borrow money, look at least 3 things. Number 1, have you plugged all leakages? Like your petty cash. Somebody wants to go to Ikeja bus stop, you just bring out 1,000 naira. You give it to the person. You don't even know whether it's going to bring change or not. There's no documentation. There's no IOU, no petty cash voucher signed. Those are avenues of leakages. Second thing, have you tried to diversify? Not you are a car wash and then you go into catfish business. That's not what I mean. What I mean is maybe you are making cakes. Have you thought of offering cake class as a training? That's another revenue stream. So he spoke about having certain, multiple revenue stream. It may not be only one, because one can be dangerous in the business. And then the third thing is, have you deepened, your penetration of that same market? Again, you are baking cakes for Mrs. Sarah. You are asking me, Sarah, when is your husband's birthday? What is the birthday of your children? You store that. Then you send her SMS 3 days before her husband's birthday. Do you remember Oga's birthday is coming up? Have you ordered this cake? So you see, there are ways you can actually increase your revenue base and not need to borrow money. But the biggest thing to me, if at all, out of the list, is record keeping. And that is my final word.
Thank you very much. Thank you very much. Tony, do you have a response?
Yes, thank you so much, Mrs. Williams, for the insights. For the insights. And I totally agree. I mean, you need to diversify. It is not compulsory. If you are not convinced about getting a loan, don't even do it. And like I mentioned, even bringing in investors, if you are not ready to share control, because once you bring in an investor, just understand that you are no longer in charge. So if you are not ready to share control, don't bring in investors. And you can grow organically. That is looking at growing, gradually. And how do you grow? Your offerings. How many products do you have? How are you pricing your products? What is the cash flow that you are generating, right? You need to look at all those things. Looking at your business model again, making sure that your OPEX, that's your operating expenses, is not eating up all your profits. Because if you are not monitoring your profits, then you can't even grow. Because another way to increase your cash flow is to make sure that you are putting back your profit into the business. You are not using it for Ashwebi, or you are using it for personal use. So that discipline has to be there. And I mean, my final words will be that you need to take up opportunities. Opportunities meet preparedness. If you are not ready, then you keep passing over opportunities all the time. So execution. You need to execute. It's not just, it's like when you go to a doctor, you complain, you have headache, you have all sorts, and you are giving you are giving the medication, you are giving the Panadol. If you don't take it, nothing will happen. The following day, the headache will still be there. So the onus is on you as an entrepreneur to take the required actions that will help you grow your business. Thank you so much.
Thank you very much. Thank you, Fayo. Thank you.
You're welcome.
That has been very, very, very useful, and I know that all our entrepreneurs will benefit from all of this. And so I would like to say that our mentors are available for you to book on peak time, and that has been put in the comment section, so you could book sessions with them on peak time and then discuss a bit more about your business. And then also they will be made available on our YouTube channel at TechQuest STEM Academy. And then if you have any comments, like our channel and subscribe to it so that you have access and information about upcoming sessions. And thank you very much again. And you could also get that on our page at Junub Open Space also. So thank you very much, everyone. Have a wonderful day, and we would look forward to the next week's session. And please be available and join us once again. Thank you, Fayo. Thank you, Tony, and thank you to all our entrepreneurs. Have a wonderful day.
Thank you so much.
You're welcome. Nice meeting you, Tony. Bye.
Yeah, bye-bye.
Bye. Talk later. Bye.
Thank you.
All right. Bye.